Ahoy there, trader, and welcome back. This is the Anti-Investor Swing Trading Podcast. So let's talk about 7 reasons why you're failing as a trader. So welcome back to the Anti-Investor Trading Podcast, where we talk about swing trading stocks, stock options, index futures, and maybe occasionally the few day trade along the way. My goal is to give you the right tools, the correct rules, the software to assist you, a community to support you, and if you'll allow me to be a mentor to show you the right way so that you get real results in the fastest and smartest possible way. So with that said, let's dive into the 7 reasons why you're failing as a trader. The first one on my big list is you're not trained properly for the job you're doing. Now, if you think about this, it makes logical sense. Trying to DIY and Frankenstein things or make it up as you go along, or jump out the airplane and imagine and invent wings or a parachute on the way down. That's not the way to the fastest success. If you were a doctor, a builder, even a checkout person, there's no discrimination against where you're at in your work journey. All professions have some degree of training just to be competent at the job, let alone a skilled professional. So trading is no different, and you'll see that this is a common theme throughout most of the things that I talk about. So you need some formal training to just be competent. Now, the second item is that you've not decided on a trading style, and this can be a little bit vague. It might take a little bit of time to figure this one out because you've got to do some book learning before you realize, hey, this is the style that I'm interested in. And what I mean by that is you don't know what you don't know, but when you start to investigate this trading business, it might be that you look at value investing, and this was one of the journeys that I took. Just to give you an illustration, I read the Warren Buffett's and looked at value investing, and I determined that while it was a way to profit from the markets, it wasn't the way that I wanted to profit from the markets. So all a trading style or the personality of a trader means is what's your list of preferences. Again, for example, I want to have a short-term trading style that benefits from upward or downward movements in any market, any stock, future, commodity, option, whatever. I'm agnostic to what I trade. I've got some preferences, as I mentioned, but I want that payout cycle to be anywhere from a day to a few weeks, and at the most a few months. That's my time horizon. So that means that I'm not really going to focus on fundamentals. I'm not going to look at the Warren Buffett style of trading. I'm not really concerned on that methodology. It's not right or wrong. It's just that it's not what I want from my trading. I want to be able to check in, check for trades, and check out without spending hours at the desk flicking through chart after chart. And again, I want a rule-based approach that helps me with that so that I can zero in on the best opportunity today or this week or this month, depending on, again, one of the time horizons that I like to trade. So when you figure that out, then you can concentrate on the right strategy, the tools and the tactics to help you with your trading style, your personal objectives. Another thing to consider as well, number 3 on my list, is confusing busy work with progress, or the learning phase with progress. Again, there is a learning curve. There's always a steep learning curve with anything new, and trading is no different. But being busy at the task of trading, again, flicking through chart after chart after chart, hoping to find the next opportunity, hoping that the next one that you look at is the one. That's not progress. That's just hoping that you find and stumble across something. You want a system that you can zero in on the best opportunity, again, without flicking through chart after chart or being busy or spending hours at the desk seemingly doing something, when the reality is you're just looking at the charts. You're not really doing anything. So without a trading style in mind or a system in place, you can confuse the act of learning the craft or being busy and putting indicators on and off or drawing trend lines, it's a waste of time. Or with these new web browser charting platforms that are quite popular these days, changing the scale on the chart, just leave it alone. Just, do we have an opportunity, yes or no? If yes, place it. If no, come back to it. That's the algorithm in my mind. Is there something for me to do on this chart? No. Is there anything obvious for me to do on this chart? No. We'll move on, go and look at something else. So don't confuse busy work with progress. The next, number 4, is again one that's kind of related, but it's looking for the holy grail, looking for a strategy or a system that has 100% success rate on trading the markets. Let's just put this into context. If you had a business on the main street, and you expected every customer, every person that came into the shop to purchase $100 worth of items, whatever the thing is, doesn't matter, but you expected 100% of the people to come into your shop to buy $100 worth of items, or again, whatever the thing is, so 100% sale rate, that wouldn't be realistic. It would not be realistic at all. You automatically know that that's not realistic, because you're going to have a certain number of customers that come in just browsing, they're window shopping, they're just passing the time. Maybe some of them are going to buy 1 item, some of them are going to buy 10 items, some of them are going to buy 50 items. Again, I'm just making some illustrations up. And then some of them are going to come in and give you and ask for a refund. The product was defective. And then there's going to be some items don't even get sold. They're broken, they get delivered wrong, they get stolen. There's all those things that you take for granted, you just know to be true. And again, trading is no different. We just need to put it into context. So indicator hopping and jumping from time frame to time frame, or strategy to strategy, or tool to tool, looking for a widget or a whiz bang that gives you 100% success rate, and looking for that holy grail strategy, that's not a trading plan, that's not a structure, and it's doesn't work that way. No business works that way. Nothing is 100% proven and profitable every time. Again, we know this in the world of business, so trading is no different. Stop looking for the holy grail. Look for something that gives you an edge, a proven profitable edge that you can replicate day in, day out, that gives you an opportunity. Again, something as simple as buy the dip in the context of the trend. I talk about this quite regularly, and if you want more details on a very simple trend trading system, go back to the very first episode. I map out my buy the dip BTFD strategy, buy the dip and sell the rally, trend trading at its finest in upward markets or downward markets, and you can hear what I consider to be a very proven and profitable trading system. Again, it works across multiple timeframes, multiple markets, multiple instruments, and again, it's fully mapped out and outlined there, so go back and listen to that very first episode. Now, number 5 on the list, guessing at trading rather than looking at the data. Again, related to systems and strategies. So many people get page 47 of the Technical Analysis Handbook in their mind, and they look at the charts and they go, yep, that looks about right. Again, we want clear, concise rules to define what we're looking for. Very specifically, I mean, you just heard me say, buy the dip. I'm not looking to buy any dip. I'm looking to buy a dip in the context of a trend. Again, just adding that layer of definition on what you're looking for is going to enhance the flavor of trend trading and dip buying. Again, if you go back and listen to that first podcast episode, again, I also go into how I define the trend and what I qualify and quantify as a dip in the context of a trend, so that it becomes a buyable dip in the context of a trend. Again, you start to add these layers of definition on, you stop guessing and you start looking at data that is quantifiable. And when you have that definition on, I can code that up effectively, put it into some software. And again, there's plenty of tools out there, no code and low code or easy code software tools these days. I use TradeStation. If you want a no code solution, TrendSpider is really good. If that's what you prefer, then you can put the rule parameters in, and at the click of a button, it'll spit out a 10, a 20, a 30-year report that says, if you just bought the dip as per the rules that you quantified and qualified, here's what your performance could have been like. So there's no ambiguity over what you're doing, when you're doing, and why you're doing it. It just is, because you're looking at the data and you're not guessing. Now, followed on from that, assuming that you have a system. Well, to be fair, even if you don't have a system, stop betting the farm. Stop looking at how much you will win and start looking at how little you can use. This is the difference in mindset that separates the professional long-term trader from someone who's just gambling. Max risk and max loss is what we want to look at. We want to have a definition of, if I'm wrong, what's my exit plan? Instead of just putting a trade on and hoping that it will work out and assuming that it will work out, have an exit plan. If a certain amount of profit is reached, that's your target exit. If a certain amount of loss is reached, your stop loss essentially, when that condition is met, exit the trade, so that you've got a definition on the risk that you want for every trade idea that you have. And again, not every trade's going to win, so we need that in place. I don't know which trade's going to win. I just know that on average, I will win. And that, it takes a little bit of a mental jiggle to get there, but it means that you're not going to bet the farm on one trade and put all your eggs in one basket and hope and pray and wish and have sleepless nights that it will work. You can have multiple trades with smaller risk, all working for you. Again, think of your trades like employees in your business. They are. They are employees. They're all busy little bees working for you. And some of them are not going to work. Again, using our business metaphor, some of them are not going to work. Some of them are going to kick the tires. Some of them are going to give a refund. But then some of them are going to win, and some of them are going to buy one of every colour and every size and every product that you've got. And you're going to have the big win because you've spread your opportunities across multiple occurrences. Now, finally, as you probably gathered, we're leading up to not having a strategy or trading process. Again, everything's kind of related to this, but no strategy is the single biggest reason why traders fail. Again, going back to the first comments, no business succeeds without a trading plan. And even if those businesses do succeed, there's a certain number of those businesses that fail because they don't have a unique selling point. In the context of trading, we're looking for a trading edge. We're looking for a positive expectancy strategy that on average produces a profit over the long term, over multiple trades, multiple time horizons, days, weeks, months. We're looking for that edge. Every successful business has a plan. Trading is no different, so that when you have a proven process, it gives you that edge. You can have the confidence to place the next trade, so that if you're stopped out on the last trade and the one before and the one before that, it gives you an expectation that every trade is unique. It's just on average. If you're not betting the farm, it allows you to place the next trade and the next trade and the next trade, so that you'll be rewarded over a long period of time and multiple trade occurrences. So the bottom line is, no matter which way you look at it, you need a plan of action with an edge. And if you want to go faster, get a mentor to show you the way. If you need a little help with that, so that you can start by shooting me a message, there should be next to this audio, there should be a link. Takes you to my website. Again, shoot me a message. See if what I do is right for you. If it is, we'll have a longer conversation. If it isn't, I'll always point you in the right direction for what you're looking for. But until we have that conversation, I won't be able to do that. So if you like what you heard today, be sure to follow and listen to the very first episode I've already mentioned, where I map out the first of 6 of my most popular money-making patterns and strategies. So that's all for today. Thank you very much for giving me your time and attention, making me a part of your regular routine. Have a wonderful day, and I'll speak to you at the same time next time. Toodaloo and bye for now. Keep in mind that futures, options on futures, stocks and stock option trading involves a degree of risk that may not be suitable for all investors. Past performance is no guarantee of future performance. Antivestor provides educational information and does not provide financial advice.